Hello and welcome everyone to this week's Gold and Silver Club end of week review for the 18th of October 2013, presented by myself, Phil Carr, and Nick Cowsey at the Gold and Silver Club. Today we will be reviewing the latest developments in the commodities markets. We'll be analysing the week's performance. During the live session we will cover an end of week summary for gold, silver, oil and the commodity currencies. We'll be looking at the top trades of the week. We'll be covering live market commentary and technical analysis also, as well as looking at all the key news in the week ahead as well, and covering any of your questions that you may have today too. Okay, so gold this week has been very interesting, particularly within the last 48 hours or so. So the major headline news this week is that the US government shutdown is now over. So, and let us talk you through this. So gold price has soared on the US government debt deal. Late on Wednesday, the US government approved an 11th hour deal to end the partial government shutdown and pull the world's biggest economy back from the brink of debt default that could have threatened economies around the world. This deal raises the US debt ceiling until February the 7th and funds the government until January the 15th in what can only be described as a short-term fix. On Thursday, gold prices soared above 1,300 an ounce on safe haven buying interest due to the fact that the US government debt ceiling and budget deal is only good for a few months and that this latest fiasco will be repeated again in January 2014. Now, simultaneously, gold prices were also boosted by news that the government's temporary deal to avoid a historic debt default might prompt the Federal Reserve to delay tapering its monetary stimulus program until March 2014. So this news was also very supportive for gold prices, and we will take a look at the gold charts very shortly. So right now, the markets are uncertain about the long-term impact of the government shutdown on the US economy. The latest estimates by the credit rating agency Standard & Poor's suggested the US may lose as much as minus 0.6% of GDP in Q4 due as a result of the standoff, and such a scenario is likely to keep the dollar under pressure. In fact, the dollar has broken through some major support this morning, so we will take a look at that because that is bringing down some USD Canadian dollar with it. So such a scenario is likely to keep the dollar under pressure for the time being, especially if upcoming US economic data next week shows significant weakness in the economy due to the US government's 16-day shutdown. So whilst gold price soared, the US dollar index fell and hit a fresh 8-point month low. There were also reports overnight that the Chinese credit rating agency downgraded the US government's credit rating to A- from A. So that news also put pressure on the US dollar. So looking ahead, the question really is, how will gold and silver prices continue to look next week? So we'll take a look at that very shortly. And before we do so, I'm Phil Carr, professional trader, trainer and speaker. So just a little bit about about the Gold and Silver Club, the background of myself and Nick Cowsey. So professional trader, trainer and speaker. I'm the co-founder and director of the Gold and Silver Club. I specialize in teaching people how to make money from trading the most lucrative financial markets in the world: gold, silver, oil, and the commodity currencies. I've trained thousands of individuals to become independent traders and successfully manage their own investment portfolio. I'm responsible for the research and development of the Gold and Silver Club trademark strategies that have a proven track record of generating returns for traders, and also regularly contribute to a number of financial publications and speak at numerous trading seminars, webinars, and workshops. Joining me on the call, helping answer any of your questions today, is Nick Cowsey. Nick is a professional trader, investment analyst, and speaker. He began his career within private wealth management in 2002 before making the transition into proprietary trading. Prior to co-founding the Gold and Silver Club, Nick spent over 5 years coaching professional fund managers and traders internationally for some of the world's top-tier hedge funds and investment banks. Through his first-hand relationship with some of the world's most successful traders, discovered the formula, the mindset and tools that give any individual the definitive edge to trade in any economy, and also regularly writes for a number of global business and financial publications and appears frequently with myself on financial television. Okay, so that's a little bit of background myself and Nick Kelsey at the Gold and Silver Club. So we're just going to switch across and have a look at the price of gold right now. So currently, looking very interesting. Gold is trading at $1,321 an ounce. So it spiked up significantly from where we were this time last week. You remember last Friday, we actually hit lows of 1,254. So we've had quite a surge over the last 48 hours. We'll take a look at the charts very shortly. Now, in terms of gold seasonality, where we are at the moment, well, we have seen this typical move that we get in October. If you have a look at the charts, actually, we've been downtrending for the majority of October after we hit highs in September. So seasonality has played out rather well again. We are coming towards, we're on the 18th of October now, so coming towards the third week, really, of the month now. So where we are in terms of seasonality for the gold market, it is correlating quite well with what we would expect in terms of a relief rally at the moment. We're back. We're certainly quite far away from the lows at the moment. I'll show you the technical chart shortly. Typically, seasonality-wise, towards the end of October, we do see a little bit of a lift going into the beginning of November. Mid-November, we normally see another fall just before Thanksgiving, and then we see the prices also rally along with equities. Moving into mid-November after Thanksgiving, right into December, alongside what is known as the Santa Rally with equities. So that's what we'll be looking at. Obviously, we'll keep you updated on seasonality on a weekly basis too, but that's where we are at right now. Looking at the US dollar index, just took a snapshot of this about 10 minutes ago, and this is the US dollar index just breaking through support this morning. So it's dragging down USD Canadian dollar with it. We're seeing certainly that's supportive for gold. We're not seeing gold give back any of its gains from yesterday at the moment. So if this continues, if we do see the US dollar index continue to break down today, we're most likely going to see higher prices on gold and silver. USD Canadian dollar will fall, and we're already at 4-month highs at the moment on Australian US dollar, and New Zealand US dollar is also breaking out to the upside. So we'll talk you through those very shortly, all these correlations, but very interesting market developments over the last 48 hours or so. So before we do that, we're just going to talk you through the top trades of the week. Okay, so the top trades of the week using the Gold and Silver Club signature trading strategies are as follows. First of all, we had a really nice opportunity earlier on in the week. This was on Tuesday when we actually came down. The price had started to break down, and we broken through the 1,276, which was quite an important key level. We had a retracement up to some key moving averages within the downtrend, and then we came down and we had a confirmation, a nice inverse hammer on the daily time frame, and a confirmation to short once the price got to $1,269 an ounce and down to the next key Fibonacci level at 1253, and that hit that with pinpoint accuracy when it came down to hit that level. So hit our profit target for 160 points there, so 80-point risk on that trade for 160-point reward. So for a 2-to-1 risk to reward on that, that was just early on in the week on Tuesday. And other trades that we had as well, we had a nice sell short setup on silver as well, which came down and hit our profit targets on Tuesday too, came down, hit the next key Fibonacci level 20.74. The risk on that trade was 31 points, selling at 21.49 from a break of an important level of support. And we came down and just took a 75-point trade on that, so $310 risk for $750 US profit for each lot traded for a 2-to-1 shorting silver. We've then had some nice opportunities over last week on oil as well. So oil, it's been in a downtrend. We'll have a look at WTI and Brent shortly, but WTI in particular, it's been in a very clear downtrend, nice clear trend channel here. It's just on the 4-hour time frame. We came up, we retested that. This was just on, let's have a look, this was on a Wednesday that we actually came up. We retested that level. We produced some nice rejections off that downward trending channel, and at 102.57, just shorting that, we actually hit our profit target just yesterday at 101. Back to that very key level of support. There's been, I'll talk you through that shortly, but it's been very interesting, the 101 level on WTI. It's been really defended quite strongly. So that was a 154-point trade. reached that over just under 24 hours. The risk on that was 60 points to $600 for each lot traded, for a profit of 154 points, so for $1,540 profit on each lot traded, for a 2.5 to 1 risk to reward shorting oil. We also, this was the really nice setup that we had. This was just on Wednesday evening stroke Thursday morning, where we finally had a breakout. We had a really nice setup which had been brewing for a couple of days. You can see very clear rejection when we came down to 1,253 level there. We got very clear rejection on that, got a dragonfly doji on the daily time frame, followed by another hammer which was starting to show that we're building up some pressure to the upside. The confirmation of that was once we broke through 1,295 US dollars an ounce, and we came all the way and actually hit our profit target there. Key Fibonacci level at 1321. So that was a 260 point trade. So the risk on that was 80 points. Each lot traded $800 risk for 260 points profit. So 2,600 US dollars profit for a 3 to 1 on that gold precision trade. And finally, Brent crude oil yesterday on the 4-hour time frame, we came up, we retested this level of resistance on Wednesday, produced a nice inverse hammer at key level of resistance. A lot of other factors lined up for this trade, including fundamentals, and we just shorted. Nice risk to reward, 65 point risk on that, so 650 US dollars risk on each lot traded for 140 points profit as we came back down from, so we shorted at 110.29, came back down to profit target of 108.89 for 140 point profit for a 2 to 1 there, shorting Brent crude oil. So those are the 5 top trades of the week. So we've had some really nice moves on the gold, silver and oil markets again this week. So what we're going to do now, we're just going to move on to some live technical analysis. So with that, I'm going to move across to my charts and we shall take a look at the markets right now. Excellent. Okay, the first market I want to actually have a look at and take a look at is going to be USD Canadian dollar. So we can see just this morning that the US dollar index, for those of you who have that chart available, that is actually broken some major support this morning. We're on our way down. USD Canadian dollar is strongly correlated to the US dollar index, and we're seeing at the moment, you can see we had a breakthrough of a cluster of Fibonacci's yesterday. You can see we're below a lot of key moving averages, and we're actually producing an inverse hammer on the daily time frame. Now, at the moment with USD Canadian dollar, if we continue to come down, we're going to start testing some very important levels of support here. We've got another Fibonacci cluster here. We've got 1.02527. It's going to be a key level because we've also got the 200-day moving average here. And if we come down and we retest this level, if we break it, as we saw, we tested this level on the FOMC statement where they came out with no taper back in September, and you can see back here where we broke this Fibonacci level, we came down very short and sharp for quite a nice sharp move, about 75 pips on that downward break of Fibonacci. So we're going to be keeping a very close eye on that. If we do break 1.0252 on USD Canadian dollar and we break the 200-day moving average, we could be in for quite a nice fall to the downside. So we will be paying attention to that. Likewise, if we do find that level supported and we find that we get rejection off that level and the US dollar index finds support around that where it is at the moment, if the US dollar index finds some support, we could see a turnaround here, and we could actually find that USD Canadian dollar does find some support around this key Fibonacci cluster and just comes back up and retests 1.033. Those are the two scenarios we're looking at USD Canadian dollar, but it's certainly coming down to a key event area at the moment. So we're going to be keeping a very close eye on that today. So that's definitely one to watch today. Now moving across to gold. So gold finding some support after yesterday's big surge. This was a 450 point move from its lows. So had a really big surge on gold yesterday. You can see at the moment on the daily time frame, we are holding onto the gains from yesterday. We didn't give back all those gains, which you sometimes do get on the gold market. So we've found this to be very supportive, this move. We closed above this downward trend channel, which had been forming really since the end of August, and we closed above some important moving averages as well. So the next key levels to be looking at above now are going to be, again, this cluster of key levels, so 1,333 through to 1,342. This is going to be the next level really for gold to get through in order to do some damage. So it really needs to, we could easily see it spike up to these levels today, but it does need to break above these levels. Really, if it can break above 1,342 and make its way back up to 1,353 in the next week or so, we could start to carve out a bit of a low and a bottom in the market where we are right now from the 15th of October. If it can do that, if it can work its way up to start really producing some solid moves from here. If we do find rejection around these levels, it'll be just we're going to continuation of the downtrend. We've got some key moving average here as well. If we get some rejection around the 1333 to 1342 level and it just can't break it, we may see a continuation and they're going to come back down and retest levels below. But at the moment, it's looking good for gold. Good close, strong. It's holding on to its gains. We're probably, if we do get a continuation to the upside, these are the levels to be looking at. 1333 to 1342 are going to be the near-term levels for gold right now. Moving on to silver. So silver putting in a similar move. It did hold on to a lot of its gains as well. We also had a nice breakout on silver too. You can see the very strong dragonfly doji on the daily time frame here. We broke above a key level, which was on Thursday, and you can see that was just above 2140. And we had a nice breakout, and we look to be on our way to 2122 here. So I would looking at silver here, it's pretty strong. I would say we're probably going to come up to retest these high levels here, 2122 to 2250. Got some key moving averages here, and also 2250, a very important level for silver. So I will be monitoring these as the next levels to get up to. If we can break above 2250, then we might start to see a lot more buyers get involved in this market and push the price back up to $23 an ounce. So silver's got a bit of work to do, but it's looking good. It closed above key levels yesterday, and you've got a hammer on the daily at the moment, so it's looking fairly on the bullish side at the moment. Now moving across to Australian dollar and New Zealand US dollar. Australian dollar, it's almost done it now. We saw this breakout occur yesterday, and we were targeting this next key Fibonacci above 0.9699. What a move. So it's breaking out to 4-month highs at the moment. It looks really set. It's hardly got any work to do now in order to hit that level. It's about 30 pips away. We're probably going to get resistance just above here, where we've got 0.9699 and a port moving average just above here as well. So I would be looking at some resistance just above here. I wouldn't be, if you're just not got any trades already on Australian US dollar, it's a bit late to get involved at the moment because it's really the move, as we've discussed on previous webinars. We've been trading all the way along. We've been getting in long as we've had opportunities to do so, and now we've finally broken out, but we're almost at a key profit target at the moment. So monitor Australian US dollar. I would say it's probably going to come up. If you're in this position at the moment, 0.9699 is going to be a very key level. We've got a couple of Fibonacci's there as well, a bit of a cluster of them. So I would have a look at this key level of resistance next for Australian US dollar, and we'll be looking at that next week, how it's going to react from that level of resistance. New Zealand US dollar, same situation. We've come up. We broke out as well. Just yesterday, we broke out from the 3-month highs, really. We've broken out. We're on our way to 2013 highs at the moment. We haven't got too much work to do here. Just looking at the weekly time frame, this is the high really for us to break out to next 0.866 here. But where we are at currently on New Zealand US dollar, it's looking, you had a bit of a retracement yesterday, came back, almost tested 0.8438, got a hammer on the daily time frame. Looks like we could still, if we see the US dollar index continue to fall today, we could just explode to the upside really. And we've got quite a lot of potential resistance coming up as we get past 0.85 level. But having said that, it's looking very much the momentum is bullish at the moment. So we might get a further move to the upside here. But we're going to start encountering some resistance once we get above 0.850. But it's looking very much on the bullish side still at the moment. So we'll monitor that on the US Open in a couple of hours' time. Moving across to Brent and WTI. So let's have a look at Brent at the moment. Brent, you can see we have found some support at a profit target level yesterday, just at the 108. Let's just clear that up for you. the 108.88 level. So we did find some support there. You can see actually where we've had quite a few tests of this level. So 1, 2, 3 days in a row, we've actually found support at this particular level. So Brent and WTI both very much moving within ranges at the moment. So we're seeing both of these markets very range bound. You know, you could draw, and we will draw just a box around the recent consolidation of these. This is the consolidation zone we've been in for about 5 weeks now on the oil market. So on Brent and WTI, both very much stuck in consolidation at the moment. So this is providing a lot of opportunities to go short and long just within this consolidation until we finally will get a breakout just here at the, we're looking for the market to break above 111.26 before it starts going higher. Probably have $1 or $2 moves to the upside if we can break above that. Next levels being 112.31, then 113.13. Otherwise, we may just continue to stay within this consolidation, come up to back up to 111, find resistance, sell off back to 108 again. So we are seeing just this whole consolidation zone at the moment, and you can see here just on the 4-hour time frame, this is the my signal that we got this week in order to short. So there's been a lot of nice opportunities on Brent. Moving across to WTI, WTI has an incredible battle around the 101 level. So it's been very interesting. You can see we've got this market is downtrending. We keep on producing lower highs here with the exception of Wednesday when we spiked out, but we also found resistance to the key moving average before selling off as well. And we came down, we broke through the 101 level yesterday during the Barack Obama speech where he was talking about the government reopening and the end of the shutdown, and we did see WTI come down, test around the I think it was 101.30. Let's have a look. 130. Yeah, spike low 119 there, but it has found some support. We are seeing a bit of support again on the daily time frame here on the 4-hour. We're seeing a lot of support. You can see how many times here the 101 level has found support. So 1, 2, 3, 4, 5, 6, 7, 8. Even yesterday we closed around that 9:10. So very strongly defended this level. This has offered opportunities to buy from this level of support. So 101 just to buy back, normally for about $1 or $1.50 moves. So for between 100 to 150 point moves back to resistance and then selling it back to support. So yeah, the market is just bouncing between support resistance for both Brent and WTI, again providing a lot of day trade opportunities. These markets, when they move like this in consolidation, are very day tradable. So I would be looking at certainly today Brent, WTI, both of these markets. USD Canadian dollar, I suspect we're just going to come down. We're going to hit 1.027119 very easily today. It's just going to naturally gravitate. It's about 30 pips lower. It's just going to come down, hit that. We want to see how it's going to react when it comes to this cluster of Fibonacci below. If we get a break of 1.0252, things could get very interesting. For gold at the moment, just consolidating. The US market will probably give further movements on gold this afternoon, whether we're going to spike above and just hit these key resistance levels just above or hold where we are. It's important as well to see where we close today, to see if we can continue to close above this this downward trend and continue the breakout. So I would like to see gold again for a bullish move moving into next week to close above 1306. Moving into next week, ideally above 1321, but still a close above 1306 will still be on the bullish side moving into next week, as long as it doesn't get under 1300 again. If it closes back within this downward trend channel, we could see again further sell short opportunities moving into next week. And similar situation for silver. Silver's closed fairly strong. We're just looking for it to get back to retest profit targets here, just the resistance levels above 22.22. 22.50. If we get a break above 20.50, we're going to be off to the races for about $1 move. But at the moment, we're just seeing some slow buying across the UK and European session. So we'll see how this reacts in the afternoon. So those are the markets to really be keeping an eye on today. With that, we'll talk about news coming in next week. Key news announcements to be aware of next week. Okay, so with the government reopening now, a lot of news which was due out across the week. You can actually see here just a snapshot. We've got non-farm payroll is now going to be on Tuesday next week. So definitely one for the diaries, 1:30 p.m. GMT or 8:30 ET. So non-farm payroll is going to be Tuesday next week. Oil inventories is going to be on Monday. US existing home sales on Monday. So let me talk you through it. So next week on Monday, 21st of October at 3 p.m. GMT, we have US existing home sales. That report measures the changes annualized number of existing residential buildings that were sold during the previous month. That report helps to gauge the strength of the US housing market, and it's a key indicator of overall economic strength. So a higher than expected reading should be taken as bullish for the US dollar. A lower than expected reading should be taken as bearish. And then on Monday at 3:30 p.m. we have US crude oil inventories. That data reports the number of barrels of crude oil commercial firms have in inventory. Commercial firms report their inventory levels to the Energy Information Administration on a weekly basis. So we didn't have the inventories come through this week. So Monday is going to be important for your Brent or WTI oil trades. A higher than expected reading should be taken as bearish for crude oil, and a lower than expected reading should be taken as bullish. Moving to next week, on Tuesday, we have US non-farm payrolls. That measures, so that's going to be 1:30 p.m. GMT, 8:30 a.m. ET. That measures the change in the number of people employed during the previous month. So excludes the farming industry. Job creation is the foremost indicator of consumer spending and economic activity. A higher than expected reading should be taken as bullish for the US dollar, while a lower than expected reading should be taken as bearish. And that's, of course, important again because the US dollar is inversely correlated to gold and silver prices. Also next week, so US natural gas storage is going to be on Tuesday instead of Thursday. So for those of you trading natural gas, the Energy Information Administration, the EIA natural gas storage report measures the change in the number of cubic feet of natural gas held in underground storage during the past week. So while this is a US indicator, it tends to have a greater impact on the CAD due to Canada's sizable energy sector, and that's important because the CAD is correlated to oil price too. So that's going to be Tuesday, 3:30 p.m. GMT, 10:30 a.m. ET. Next Wednesday, the 23rd of October, we have the US Import Price Index. That measures the change in the price of imported goods and services purchased domestically. A higher than expected reading should be taken as bullish for the US dollar, while a lower than expected reading should be taken as bearish for the US dollar. And that's important because of, again, USD is inversely correlated to gold price. Moving into Friday next week, we have at 1:30 p.m. GMT, 8:30 a.m. ET, we have the US Core Durable Goods Orders. Now that report measures the change in the total value of new orders for long-lasting manufactured goods, excluding transportation. A higher reading indicates increased manufacturing activity, so a higher than expected reading should be taken as bullish for the US dollar. A lower than expected reading should be taken as bearish for the US dollar. And again, that's important because of the inverse correlation to gold prices. So those are the key news announcements really to be aware of next week, particularly on Monday and Tuesday. We've got a lot of key news announcements with the US reopening and non-farm payrolls on Tuesday. Okay, so for those of you who are interested to take their trading really to the next level, you can find out more about our Gold and Silver Club Masterclass programs and also our live trading room access and our members forums. To get exclusive access to these, you can find out more at the Gold and Silver Club. Join www.jointhegoldensilverclub.com to request information on the Gold and Silver Club live trading room programs. Or, of course, you can contact us at our London, New York or Johannesburg offices. So for London, it's just +44 0207 193 0403. For our New York office, it's +1 646 808 0403. And for our Johannesburg office, it's +27 11 083 8403. Or, of course, feel free to email us at office@thegollandsilverclub.com. And just very simply, here is the form to request further information. And finally, do make sure you take advantage and subscribe to our newsletter at www.GoldandSilverClub.com, and you'll receive free weekly gold, silver, oil, and commodity currency news, live market analysis, and prices. So do make sure you take advantage of that. Okay, so it sounds like we're in for another very interesting week next week with all of the news now being released from Monday and Tuesday onwards. So guys, wish you good luck for the rest of the day's trading. Have a great weekend, and we will catch you back here same time next week. Okay, so take care, guys, and we'll speak to you on the next one. Cheers. Bye-bye.